Hey guys, it's Willie from Suerte So today I want to talk to you about gold as a potential put option for your portfolio. Um, what I have in my hand is a Canadian gold maple leaf with a 1 ounce. So I guess at today's prices, it's like 1750 or whatever it is. It was as high as $2,000 an ounce, I believe, about like a year ago. So unfortunately, gold has been kind of like not doing so good in the past year, but over time, I think like it'll still be better than just cash. So that's why I bought some as a potential hedge. Um, Going forward, I don't think it'll perform as good as Bitcoin, um, but that's just my personal opinion. Things could change. People might feel more comfortable having a tangible store of value rather than like a intangible digital store of value. It really depends on like where you're coming from, and I guess like how maybe like I don't want to make this into like a boomer versus like a millennial like generational debate kind of thing, but I guess like for folks that are like kind of like my age and up, we grew up like before like smartphones, so I guess maybe we have like a tendency to kind of like tangible things like gold like stuff, or like things you can hold in your hands, or like things you can touch. I think that's why like some people also still like real estate as a way to store at least like part of your wealth. But I think it's good to have maybe some digital assets as well, just in case. But again, I'm not a financial advisor. I'm not telling you what to do. I'm just sharing what I'm doing and what I plan to do in the future. I think for now, I don't plan to accumulate any more physical gold, because it's like a kind of like a physical risk, because like let's say like you keep it in like close by, like maybe in your house, in your backyard or something, and like somebody finds it, then you're out of luck. Whereas like I guess with like digital assets, um, you know, hopefully you keep your private keys in a safe place. Um, Again, if someone finds it, you're kind of out of luck. But maybe if you spread like the the recovery phrase over like different pieces of paper in like different locations, um, that could help. Same thing, I guess, with gold too. I guess you can kind of like shift, like maybe you have like a few ounces like in your home, and then a few ounces in a vault somewhere. Um, but anyway, uh, back to why like gold could be a potentially good put option for your portfolio. So recently, like the market, depending on what stocks you own, like it's been like really volatile, and like you might have already, like me, gotten shaken out of your some of your positions, and it was really annoying. Because at first, I started like pruning my portfolio, as I mentioned in a previous video, because then, I have to like get ready to pay like the 2020 taxes. Even though we got an extension to May 17th, or I believe it's May 17th. Um, you still have to come up with cash to sell your positions, to cover your tax liabilities. So you had to sell your positions. And I wasn't like, I don't know if it was like everybody like acting at the same time, or it was just like bad luck or whatever. Like I had to sell at like lower prices than I wanted. And I'm really kind of, I was really mad. But I guess like the good thing with gold is it's just like a lump of metal, and it doesn't really like the value, it doesn't really change. It's like the price around it that, in US dollars, that changes. So that's why it could be a good kind of like a put option on your portfolio, because I guess like even though at this particular point in time, it didn't perform as well as hoped. There's a lot of like moving factors. So maybe over time, like over like a course of a few years, could still be a good like put option in your portfolio, like it'll protect like some or maybe even most of like the value of your portfolio, because you have to remember, even though stocks like over the past few years have done like pretty well, going forward it probably won't do as well. And then you also have the double whammy of like the US dollar depreciation. Even though like it might perform well against other currencies, like all fiat currencies eventually, like they like there's inflation risk where like it doesn't maintain its value. So like all around the world, whether you're in euros or yen or whatever currency that you have, it's gonna lose some value, and like some are gonna lose faster than others. Hopefully it won't be like something like Zimbabwe or Venezuela where or Argentina, where like the value of the currency just like it's kind of scary, and I don't want that for myself. There's always risk in whatever that you hold. So that's why, like for certain cases, like everything has like a risk. Like gold has like physical risk where someone can take it from you. Digital assets, like if you're not careful, someone can hack into your account somehow and steal it digitally, so you don't even have a chance to fight back. Stocks could, like the past, in March 2021, like it was like a crazy roller coaster, depending on where you are. So that's why it's good to have like different types of assets, so that like when one does really bad, like something else can like can hopefully offset it. And I actually plan to make kind of like a corresponding, like kind of on the flip side to like to cash as a call option in your portfolio as well. So it's good to have like different mixes of different type of asset classes. Ideally you want them to have some type of cash flow producing quality, and that's where like gold unfortunately kind of falls short. Well, at least like physical gold, there's no good ways to really get some yield on it. Like if you want yield, you'll probably have to go like through your brokerage account. Like if you buy either GLD or maybe a gold miner like GDX, if you sell calls against it, then you can get some type of yield on it. But of course, like it might not be fully backed. It's not like real gold. It's just like the dollar value of gold, and it might be artificially suppressed. I've seen like different theories as to how different banks and central banks, they don't want the price of gold to get out of hand because they don't want to scare people with like hyperinflation risk and scares. But I think most people are kind of, especially if you watch any social media, like you just do a search on like gold theories, and you'll get a whole bunch of interesting results. But I think like for myself, I like having some physical gold available just in case. I guess like again, it depends on like kind of your background. If you're a little bit older, you'll probably get it. Maybe if you're a little bit younger, like you might not see like the value of it right away. But I think just like maybe buy like a small amount, like maybe like they come in like 1/10 of an ounce sizes. So at today's prices is probably like well, depending on the dealer that you're going, you could probably get it at under $200. So it if you really want to like start small, and in fact like even there's some like gold, I think it might even go down as like 1/20th of an ounce. So if that if the price of like the ounce of gold is like too much like for you, you can go that way. And it depends on like also like your I guess your liquidity preference. Like, do you want it to be instantly available? So like, if you buy physical gold, like it's kind of a pain, because then you either have to sell it back to the dealer, and like the spread between the bid and ask could be like a little bit wide right now. So that's a little bit of inconvenience. So I would just buy like enough where you feel comfortable that like let's say if you lose it all, it doesn't matter to you. So maybe like 1% or like 0.5% of your I guess of your portfolio. That could be like, maybe just start like a really really small position and go from there to see if it makes sense for you. Because I really hope that I never have to cash this in, where like where things get really so bad where you have to just like sell your physical assets to like just get enough cash to get something to eat. I really hope it never gets that bad. And that's why like I don't want to get into like a whole gold versus Bitcoin debate. But I just want to share my thoughts on gold as a put option for your portfolio. Hopefully things never get that bad where but in case you need it, it's like an insurance policy, right? If you have someone around, that at least that gives you maybe a few days or like a few weeks of just like food and like water, like survival purposes. Again, hopefully it never really it gets that bad, but you just never know. It seems like anything can happen nowadays. It's just crazy. And like I know I like some of my videos like they've been kind of like, they feel kind of dark. I think it's just because like the stock market's down and then this and that, and it's just good to know what your options are, just in case. So hopefully it gives you some food for thought as to like how I'm looking at gold and how you might want to look at it too. Regardless of if you buy it or not, it's just something to think about. So thank you for watching. I hope this like is helpful. If you have any other like portfolio topics you want me to cover, please feel free to let me know in the comments section below. Thank you, and if you can like and subscribe, that'd be great. But otherwise, I'll see you in the next video. Bye now.